Welcome to Caliente Topics. My name is Veronica Russell from MNMTaxman.com, and I have Patrick Russell, EA, as well from MNMTaxman.com. And on today's webcast, we're going to talk about NFT, right, Patrick?
Very good, Veronica. So, non-fungible tokens, we're swinging back around and kind of crystallizing our understanding of NFTs now that tax season has started, and now we're starting to get questions. Pat, Veronica, how do we handle these NFT transactions? And so we really want to start from the basics of what we're looking at here. First and foremost, you're looking at simply a stock level type of reporting. You're talking about this Form 8949 to go along with your Schedule D. Now, keep in mind that NFTs live in the world of blockchain, right? They're essentially a crypto asset. More than likely, you were using a cryptocurrency in order to initially buy this NFT, a non-fungible token, being the cryptographer's representation of anything. It could be Melania Trump's hat, a picture of that. It could be a real estate representation. You know what I mean? They're really coming up with very innovative ways to use the blockchain method, creating these tokens that can pretty much be anything. But right now we're kind of looking at them in the sense of collectibles, right? Sort of a brand new version of collection cards, baseball cards, if you will, where you have these enthusiasts that are trading these nostalgical, I would say, collectible items that typically make up the NFT market. And so how we look at that is, once again, when you buy an NFT, you've got yourself a taxable transaction with the source cryptocurrency that you use to buy the NFT. So not only are you starting out with a cost basis, how much the NFT costs, but you also have a sub-taxable transaction from the cryptocurrency that you bought in a prior period and are now using for your NFT. Those two values, that delta is going to create your first initial crypto transaction reporting on that Schedule D. You have your cost basis versus what the sale of when you use that cryptocurrency to purchase the NFT. Now you have the NFT. It's on your ledger. You need to now start making very good reporting and bookkeeping on your own of which cryptocurrencies were used for specifically NFT transactions. That's now housekeeping for crypto enthusiasts. Now it's a matter of, well, how long did you hold on to the NFT? And once again, it can be anything, but it depends on how long you hold it. Now, if you hold on to it for a year or less, that's a short-term capital gain, right? Which is considered ordinary income, where you have the tax bracket. The lowest right now is 10%, and right now the highest in the marginal tax bracket rates is 37%, so somewhere in between. If you hold on to the NFT for longer than a year, now you're talking about long-term capital gain. There's caps, right? You have 15% is your cap for most taxpayers, but if you do exceed over $441,000, like it's a big bonanza sale, there is an actual exceptional cap of 20% on long-term capital gains. And so it really is just a matter of keeping good records and determining how long you've held on to that NFT. One final note, wonks out there. For the 8949, there are special codes to designate your NFT purchases that were deemed collectibles. Now, this is something that will come back around because this is not quite as clear yet of what's considered just a regular NFT that would be just considered, like I said, stock sale, short-term, long-term capital gain, and what's considered a collectible, which we know there's a special rate for the federal collectible tax rate of 28%. So that's a conversation that we are still keeping our eye on for more direction from the IRS directly to make sure that we're on the right path. So the go ahead.
Question for you, Patrick. What do you see yourself buying with this NFT? Something that you have in mind that you might want to buy?
Well,
or maybe selling your signature. Why not?
Well, there you go. It's evolving out of the collectible items market and now into something that can produce income. Yeah. The big story is that Snoop Dogg has created a game to which he bought real estate on a particular cryptocurrency universe, right? And now when you visit this game, when you visit his playhouse, there's revenue that's being generated by things that you could buy, things that you can participate in by paying as you go. So it's turning in and evolving into its own separate revenue producing market beyond just the trading card status. Now, the last thing for those wonks that want to look for some literature, I would recommend starting with IRS Notice 2014-21. What this is it's the first verse that the IRS put out, verbiage that the IRS had first put out in regards to the existence of NFTs and how they're considered a crypto asset and are considered property in the eyes of the IRS. Guys, a quick way to get a quick answer is by using the comment box below. Don't just subscribe to this channel, even though we will be doing this pro bono tax workshop on a daily basis, but lend your voice to the show to make it a whole lot more fun. Vaya con Dios, compadres.
Also, keep in mind that this is not a paid consultation, so if you need one, please email us or send us a text message to 562-756-9924. Thanks a lot, Patrick.
Have a great day, guys.